There. Okay.
Let's go. Ready?
Yes.
Cool. Do you want to start off? Or do you
Sure.
want me to open?
Hey guys, my name is Vanessa Brink and I'm here with Brian Silva. I'm a realtor and Brian is a loan officer. And I thought of having this webinar today because there are a lot of people that, like me and Brian and my boyfriend, we're all self-employed and I feel like we're like the least knowledgeable or they don't like to tell our types of people what loan programs are out there and what your options are. There are several options and Brian's going to tell us all about it.
Guys, thank you guys all for joining. My name is Brian. I work with Vanessa to help getting financing for her clients. And I'm super excited to go over all of this with you guys. It's a really great thing to know, especially for independent contractors, to know the options that you have, especially outside of the conventional world on the loan side of things, to know that you could actually qualify for a home without a W-2. So we're going to be going over all of that today. So I'm super excited to get started with you guys. So let's see. Let's start here. If you want to, here, give me one sec. Here you go, Vanessa, if you want to go with that.
So again, my name is Vanessa, and I love helping first-time home buyers get into homes. I'm originally from the East Coast. Everyone always asks where I'm from. So I think that's what I think you guys are asking, like what my nationality is. My mother is Ecuadorian and my father is Peruvian, and they were born in South America and they were able to make it as a middle class family. And I saw them buy homes and at that point in my life I didn't think real estate was what I wanted to do, but I'm just saying I guess I saw the importance of real estate building wealth in their lives for them. So I'm a strong believer in that. And yeah, I live in the valley in the San Fernando Valley.
Nice. Very awesome. And like I said, my name is Brian Silva. I am your loan officer here for today. My background, I grew up in the city of Santa Barbara. If you guys know where that is, it's a little town here in California, really beautiful city. I have a background in commercial real estate, so I do know the investment side of the business as well, which helps me help my clients to structure out the best deals for them. So that's a little bit of my background. I also saw my family be part of the real estate world growing up too. So that was a huge motivator for myself as well. So yeah, I truly enjoy the real estate business. It's something I'm truly passionate about and helping my clients cross the finish line. So super passionate and excited to talk about these products with you guys. So Vanessa, who is this for? Who are we kind of aiming this for?
So people like me or you, we are self-employed, business owners, 1099ers, artists, actors, musicians, business owners, let's see, like my hair person, my nail person, uh, people like that. Oh, and Uber, DoorDash,
Yeah. Basically,
yeah.
anyone that doesn't fit your standard W-2, this is what these programs are for. Um, so many different programs that you could ideally use for different scenarios, such as if you're a 1099 earner, we could always average out your 1099 form. So different programs, pretty broad. Tons of good options for you guys that are not W-2s. So let's start going over those. So common, couple co common struggles that I see with independent contractors, and I'm sure you probably deal with these as well, Vanessa, are that a lot of people do come to us who tend to write off a lot of income from their taxes, and on paper don't qualify for a standard loan, but in reality, they do have a lot of income coming in and out of their bank statements. So we tend to help those type of people out a lot. Have you had any experiences like this, Vanessa, yourself?
Well, with my boyfriend, it's completely understandable. Yes. Especially as a landlord.
Yeah.
So there's a lot of write-offs that go into that. And then I actually did have a client, he was a CPA.
Hmm.
So he knew he could write off almost everything. And that
Yeah.
was a big struggle to
Yeah.
help him get a loan. Yeah.
What did you guys end up going with?
Well, in the end, he just needed to file the taxes. We still haven't figured anything out for him yet. He hadn't filed.
Yeah.
So, yeah. He
Yeah.
was trying to go conventional
Okay.
on
Got it.
yeah.
Yeah. Well, we could probably help them after this.
Yeah,
But
definitely.
yes, so another thing as well as a 1099er, sometimes your income isn't consistent enough. So some banks don't like to pre-approve you for that because it's super spotty at times. And I think Vanessa and I know this pretty well, especially being self-employed ourselves, where you have good months, you have bad months. So these products are ideal for people in those type of businesses. And another super thing that I see that's very common in the loan world is that a lot of loan officers actually don't know about these products, and they only offer traditional programs such as your conventional and your standard FHA program. So some people have gotten pretty bad guidance. Maybe they have been told that they don't qualify when in reality they would probably qualify for a non-QM program as the ones we're about to go into. So this is a quick little overview of how a traditional work loan works, which is usually a qualified loan. It's usually based off your tax returns. The bank usually wants to see about 2 years worth of tax returns with your pay stubs. So that's usually what we go off of. And it's usually your adjusted gross income after your write-off. So if you do write off a lot, like I said, your income could be very low on paper. Also, you do got to remember that most conventional loans do have stricter guidelines than the non-QM loans.
Stricter
Uh,
guidelines for what?
just different things like FHA would be a lot stricter than non-QM on a couple things, especially your debt to income ratios. Things in that matter, especially debt to income ratios, that's where they're a lot stricter.
Okay.
And this is a quick little overview. We're not going to go too far into this because we're sticking to the non-QM world, but this is a super vague overview of your traditional mortgage loan products that you do see out in the market, which is the FHA loan, your standard conventional, and the VA loan. I think, Vanessa, you had spoken about this earlier, how usually if you're a qualified borrower that has W-2s, you could usually qualify for assistance programs. But as a 1099er, since you wouldn't be qualified for a traditional mortgage, you wouldn't be qualified for the assistant programs that these most programs do have.
Yeah, I'm sure you guys have heard of those assistance, down payment assistance programs out there, and they do exist, but they do not exist for people like me and you. They exist for people that have the full-time jobs that are W-2s, and it's totally unfair, but there's less of a risk with those types of people and those jobs. So that's why they get that treatment. But on the other hand, those loans have a limit. I believe, what is it? 1.22 million for FHA. That's their maximum they do.
Yeah. Yeah.
And they're, I don't know. I mean, there is no limit for these non-QM loans, correct?
There is a limit. It just depends on which non-QM is. I think most of them is about up to 3 mil, so it's still a nice chunk of money that you could qualify for. But we'll go deeper into those here in the next slide. So the good news, guys, is like we said, if you don't fit the traditional guidelines, we have products to help you guys, especially as independent contractors. These products are called non-QM, which are non-qualified mortgages. It's basically another set of loans that the bank does tend to offer for people that don't qualify for the traditional mortgages that we just went over. So the non-QM products that we offer is called the bank statement loan. We have a 1099 loan, and we have the P&L loan and a DSCR loan, which is ideal for investors. So those are the products that we're going to be going over today. I don't know if you want to add anything to that, Vanessa.
Well, I just wanted to ask which out of all these, which has the lower down payments?
They all vary, but it's usually a minimum of 10% down for non-QM.
Okay, so
Usually the
it's
minimum.
10%. You're never gonna get anything lower than 10%
No,
with the self-employed
no.
option.
No, so that's the thing about non-QM products. It's usually a higher interest rate and a higher down payment. This is because you're considered as a higher risk borrower to the bank. That's the only reason. But it's always going to be between 10 up to 30% down that would be required for the loan.
Wow.
Yeah, so that's good to keep in mind. That was a really good question. Um, but yeah, let's start with the bank statement loan. This is probably one of my favorite loans for self-employed individuals. This basically, we don't need to have your tax returns whatsoever. This goes based off a 12 to 24 bank statement history. So we would just ask for your 12 or either 12 or 24 months of bank statements, and we would average the average deposits that come into the account every month. So we're averaging every deposit that comes into the account. Um,
Could you
like I said,
do could you do personal and business account?
yes, yeah,
Okay.
yeah. So you can do either or. Like I said, this is super great for self-employed individuals. The loan amount for this one goes up to $3.5 million. So it's a nice budget that you could ideally loan up to. And for this one, it is a 10% down minimum based on your credit score. So I think for the 10% down minimum, you would have to have about a 680 credit score for the 10. Above that, they would probably ask for maybe, I mean, under the 680, you would probably have to put about 15% down.
Okay. What I meant earlier was, could you do a combination of personal and business
It's
statement?
usually one or the other.
Oh, you can't combine them to have more?
No, no, no. It's either you want to use your business one or your individual.
Okay. And what if
Yeah.
you have like several business accounts? You just,
Uh, it's usually off one business that we're going based off.
okay,
Yeah. So ideally, you would want to choose the business that brings in the most money.
okay.
Yeah, so this works for a primary and second home or even an investment property. So super good one to know. A lot of people tend to get a really good deal with this bank statement loan. This is probably my favorite one out of all the non-QM products that we do offer.
Why is it your favorite?
I think it's the strongest one for self-employed individuals. Because like I said, it just goes off your bank statement loan, your bank statement balance. You don't have to show any of your tax returns or anything. So if you have a lot of money coming into your account pretty often, I think it's pretty good for those individuals.
Is this good even if you have a lot of just cash coming in? Like
Yeah.
it's just not how do you call it? You can't trace it. So is it still
Yeah.
okay?
I mean, we do trace where the money is coming from because if there are, let's say, just odd deposits from a random bank account, then we are going to take a look at that. It's usually you want to see that the money is coming in from the business that you are running. You know, there can be random deposits.
Like if someone does valet or
Yeah.
um, a food service thing where it's cash only or, you know,
hmm
um, how does that work for them?
I mean, that would be coming in from their own deposits.
Yeah.
So we would be able to work with that. There just can't be money coming in from multiple sources, you know, for us to not be able to track them down. If you're depositing the money, we could work with it. There just can't be multiple odd sources that the money is coming in from, because that would be a red flag to the bank.
Well, let's keep going, but I have a question about
Yeah.
that.
Yeah, we can talk about it. Now this is a 1099 loan, Vanessa, and this is what we're considered. We're 1099s. I think you're a 1099, are you?
Yes.
Yeah, so we're both 1099s. This is specifically good for people that earn a commission. We would basically average out your average commission for a 12-month period. So that's what we would go based off. So this is really good for freelancers, gig workers, or even commission-based workers. The down payment for this one is 10% down, like we spoke about, based on a credit score of 680. So for this, you could borrow up to 3.5 million as well. So it's pretty similar to the bank statement. This one just goes off your commissions that you're making.
Okay.
So this one and the bank statement and the 1099 are super similar, very, very identical.
Hmm.
Did you have a question on this one or?
No, I haven't heard of this one. So,
Yeah. This
um,
is another super popular one for people who are in sales. This is a great product to be a part of too.
like a car salesman or something.
Yeah. hmm
Okay.
So it's good for those type of people or even real estate agents.
Yeah.
So this is a product as well that a lot of people don't know about. It's a profit and loss statement loan. So it's basically based off a P&L sheet that does have to be created by a professional CPA. So if you have a CPA that could build a professional P&L sheet for you, we could use it for a loan. So it's usually based off a 12-month P&L sheets. The loan amount could go up to $3.5 million down. I mean, up to $3.5 million that you could borrow up to. And the minimum down payment for the P&L loan is 20%. So you do want to keep that in mind.
Yeah. That's a lot. So,
Yeah.
I was gonna say something about the CPA, but let's say if they don't have a CPA to do this for them, would
Yeah.
you provide one for them?
Yeah, I could definitely connect them with someone. It just has to be professionally made. You can't do it on your own. That's the only thing.
Exactly. Well, what is the fee if you provide the CPA
I
someone?
honestly couldn't tell you. I don't know how much they charge.
Yeah,
My CPA charges me maybe 120 for it.
that's really good.
Yeah, so it's not too bad. So it
Yeah.
just depends on the CPA. But I could always connect you with someone who does these, if that's something that you guys do need.
Yeah.
Have you seen this type of loan, Vanessa?
Yes, I have.
Okay. Have you worked with one at all?
Um, Almost, I think. I think it was it this one? No, my boyfriend, I think he has done one.
Okay, cool.
Um, and then similar to this is the VOE, but
Yeah.
the one,
VOE isn't on here,
no, no.
but let's see. Okay, so now this one I added on this is really it's a really good investor product that we offer. It's not particularly for independent contractors. It's just a really good investor tool to be aware of. It's called a debt to service coverage ratio loan, which basically isn't, we don't check your financials, but we check the property's income that's coming in to qualify you for the loan. So it's based off the property's income and not your own income. So this is a really good um, product to know if you're an investor and don't want to use your own income to qualify for the property.
Again, I have a question about this because I've seen, new buildings up for sale. And
Yeah.
they have the pro forma of what the rent is going to be.
Mhm.
Um, so the buyer could not use this loan for that because it's a new building and there's no rent per se, or
Yeah, no, they wouldn't be able to because there's only a pro forma. There's no actual income at the moment.
that sucks.
Yeah,
Okay.
so there has to be current income happening at the moment when you're getting the loan.
Okay. And what's the down payment for this?
For this one, the minimum down payment is 15%, and you could loan up to $3 million for this. But it's a 15% minimum that you have to do for this loan.
That's better than the P&L that was 20%.
Yeah, the P&L is probably the highest minimum. This is the second highest, and the other, the 1099 and the bank statement loan are the lowest ones. So yeah, this is definitely one of the higher two.
Okay.
But that's basically it for non-QM programs. I do see that we have someone in here. Faith, how's it going, Faith? How are you? I think, how's it
I'm
going, Faith?
driving. Sorry. It's good. It's good. It's good. Happy to
Thank
be on here. Had to hop
thank you.
on.
Amazing. Thank you so much for joining.
Thank you. Great information already.
Thank you. Thank you. Are you a business owner yourself?
I am. I am. I'm a small business owner. Um, I do some contract work sometimes as well. So this is always really, really good to have all of this information because it could come in handy on both ends. So
Yeah,
it's perfect.
definitely. Yeah, well, it's so good to have you. Thank you for joining. Let us know if you have any additional questions, okay?
Will do. Thanks.
Perfect. So back to it. That's basically it for the non-QM programs that we currently offer for independent contractors. Now let's just go over a quick process of the home buying process and what it looks like. Vanessa, if you want to take this part, I think you would be really good at this.
Yeah, so first things first, we usually like to get you pre-approved. And Brian's gonna look at your finances and then he's going to determine which type of loan program fits best for you. And then they're gonna give you a number of how much house you're allowed to buy, and then we start searching for homes. And that pre-approval is usually 90 days. There's a 90-day expiration date on that. So it's usually plenty of time for us to look for houses. At this time, we are lucky right now. Well, buyers should be lucky right now. There is a lot of inventory and things are just sitting on the market. And that means we could possibly get a better deal on the purchase price, and I can negotiate closing costs paid by the seller for you. So that's our goal to try to get you the best deal possible. And so that's part of the offer and negotiation phase of the home buying process. And once our offer is accepted, then we open escrow, and then the EMD is wired into escrow. We didn't talk about that, but I'm sure you guys know what that is. It's the earnest money deposit, and that must be wired within 3 days of opening escrow. And then after that, we do the inspections, the appraisal, and then the loan gets approved.
Hmm.
And then,
Yes. Oh,
yeah, at the end of that, it's usually 30 days. Then there's closing day, and the title is recorded, and you get your keys and you get your gifts.
that's the best day, the funnest day.
Yes, the
But yeah,
fun
really
day.
quick, something I do want to bring up that you mentioned right now is a great time. It's currently we're in a buyer's market at this moment. I was reading a chart that actually shows there's 44% more sellers at the moment than there is buyers. So that's a really good thing to know because you could leverage that to your benefit, like Vanessa said, to lower the price or even negotiate these closing costs for them to pay and for you to save money out of your own pocket. So really good to know. You have a lot of leverage in this current market.
Yeah, I think we should talk about the, so there's an option. If we negotiate seller to pay credits, you can use the credits towards closing costs, or you can use it to do an interest rate buy down. Um,
Mhm.
and there is for the interest rate buy down, I know that it's temporary, maybe like
Yes.
a year or two. But
Yes.
Brian said there's a permanent way to lower your interest rate.
Yes, that's correct. There is a temporary and then there's a permanent buy down. The temporary is usually it's for a specific amount of time that's usually up to you. It's usually 1, 2, or 3 years. And you're paying about 1 point, which is 1% of the loan amount for a quarter of an interest rate duck. So let's say you want to get 1 point, that's a quarter. Let's say the rates are at 6%. You're buying a quarter of a rate down, so you'd be getting a 5.75 interest rate for the 1% of the loan amount. That's how a temporary buy down does work. I know a permanent buy down tends to be a little bit more expensive. It just depends on the loan and the the debt to income ratio.
I mean, in your professional opinion, what would you choose if you had the option to get credits towards closing costs or interest rate buy down?
I think it just depends on the scenario. If you're tight on cash at the moment and don't have too much to spend out of pocket, then I would definitely do that towards the closing costs. But if you've got a nice amount of cash saved up and money isn't really an issue, then I would do the temporary buy down just to save you some money in the long term. So it just depends on each scenario and kind of where you're at in the current moment.
And what about doing an adjustable rate mortgage? It's only like for 5 years, correct?
Yes, there's different terms of how often the interest rate does change. So there's a 3, there's a 5, and then there's probably an 8 as well. So you get to choose how often the rate changes. And it's following an index as well that you should be aware of, that usually follows the current economy trends that are happening in the moment.
Yeah, and right before that period ends, you could just refinance into a different loan situation where it's just a stable interest rate, correct?
Yeah. If you have an adjustable rate, you could always refinance into a standard normal rate that doesn't go up and down, fluctuate. So that's always an option as well.
Yeah, I wanted to bring that up because I noticed that it's always the lower interest rate when I look at adjustable rate mortgages.
Yeah,
And I'm like, I would do that. You would just put it on your
yeah,
calendar or have your loan officer tell you when it's
yeah,
going to end.
yeah. It's got its pros and cons. It's a risk that you're taking, and a lot of people aren't willing to take that risk. But it could definitely pay off. It's just something that you really got to evaluate and see if that's something you want to put on the table to risk. Because, yeah, it could go down, but at the same time, it could go up. So you gotta be careful with it. It's a risky play.
So I have another question now that, everyone's trading stocks and crypto. Um, do you ever get people saying, here's my income, it's all in crypto or whatever? Uh,
I haven't gotten it myself, but I've heard about it. I have heard it actually happen. And from what I know, I don't know of any banks that are currently using that as income. But I would say that that's probably going to change in the next few months or so, because I do know some people who have a lot of money invested in crypto, and I know big corporations now are tending to accept it. So I don't see why that wouldn't be a program coming pretty soon in the future.
yeah. No, I mean, I see it all over. In other countries, they
Yeah.
use it as a form of um, currency.
Yeah, yeah. I mean, you could definitely show us the crypto wallet. I guess we could use that as a bank statement almost because it is an account. It's an asset that you have, so we could have that on your asset list.
Yeah.
So it's something that you could definitely show to us, and it would just show and it would be proof that you have a good amount of assets, and that would only help your case.
So can we talk about the loans that are above 3 million and up? Those are called jumbo loans, or what are they called?
Yeah, they're jumbo loans. They're a little bit different to deal with. I personally, we don't really do jumbo myself, being honest, um, because they're also a little bit riskier to the bank, and some banks don't touch them, other banks do. I know we have access to them. I currently just don't specialize in that at the moment. But if you guys needed one, I could always connect you with someone who does.
Yeah. No, I'm just curious because um there's a lot of these luxury houses just sitting on the market in Beverly Hills.
Yeah.
Like everything there starts at 8 million. So
Yeah.
I want to know,
Yeah.
you know, who does those types of loans and but I'm going to
Yeah.
assume it's the same programs just at a higher number, correct?
Maybe. Like I said, it's a different ball game because some lenders are willing to fund it and other lenders are not even willing to touch the deal because it's such a higher risk. Unless they're coming in with a huge down payment, then there's a bigger opportunity that the deal would work. But it just depends on the lender. But I could always connect you with someone who specializes in that.
Okay. And
So,
like my client the other day wanted to buy a property, a multifamily property.
mhm.
If it were more than 4 units, which one of these loan programs could be used for that?
More than four?
Yes.
I think these are all these would only work for up to 4 units.
Okay.
Yeah, because anything over four is considered commercial. So you would have to get a commercial loan for that.
Okay.
Yeah. So yeah, it's a little bit different on that side.
Okay. Does
And
anyone,
then
oh, here, you go,
go
sorry.
go for it.
No, I
Is
was
it is
gonna say, does anyone else have any other questions? No. Okay.
It was super informative, guys. Thank you so much.
You're welcome. We're not done yet. I almost cut us off short.
I don't have questions, but I'm still listening for sure.
Okay.
Cool. So Vanessa, what are like the things that you look for when you're looking at homes for clients?
I try to make sure that the house looks like it's in decent shape, newer windows, newer roof, uh, you know, like it's kept well.
Yeah.
Unless they want to fix her, but
Yeah.
I don't think they want that. I've walked into some houses where it doesn't look like a trailer, but you walk inside and it's just like, this feels like a trailer. And stuff like that. You know, the quality, the windows and the layout.
Yeah.
And you know, depends on where in the neighborhood is this? Near the freeway or near the train tracks? Nobody really wants to be near those things.
Yeah. No, it's a good point. And it's also good to keep in mind, just like you said, to have a property that's in good condition. So you don't have any issues when it comes to inspections and appraisals, because that's definitely going to affect your negotiating power, just like we said. If something does come up in inspections, which we have another one here. Um, you could always negotiate that when you have a strong agent, just like Vanessa herself. She could always negotiate either credits for having the issues on the home. Um, and yeah, it's definitely a good thing to keep in mind. You don't want to get a property that's a mess, that's going to cause you tons of problems and is just going to drain you out of money. So
Yeah, exactly. And there's so many things that you can't see under the wall. You don't
yeah,
know what's going on under there.
yeah, definitely. So, Vanessa, what happens after we got the buyer pre-approved? You guys looked at homes and then the offer is finally accepted.
We open escrow immediately if it's on a Monday through Friday.
Mhm.
And then the 3% EMD is wired into escrow. And again, that is the earnest money deposit. That shows everyone that you're actually serious about buying a house. Usually it's 3%. Sometimes people are a little tight with their money. So it's not always 3%, but that's the common standard. And then right after that, I call the inspector and I make an appointment and we go and have the inspection done. And he tells us what's bad, what's good. And he gives us a whole report. And if something is really terrible, and sort of risky for your health, that's going to be addressed. And I usually will ask the seller to either fix it or give us credits. And at that point, the seller really has no choice, or they can cancel, but they have no choice if it's something that can put someone's health at risk or in danger. Um, and then let's see. So that would be what I do. Then the bank comes in and they send their appraiser and they go and see if they believe the house is actually worth what you offered. So that's another part that could be tricky because sometimes there's multiple offers and these offers drive up the price of a house. And in the end, who knows if the house will actually appraise for that value. Um, so it's happened before to me as a listing agent. So, but things can be negotiated at that point.
Mhm.
I was selling a house in Northridge and the house didn't appraise, but the buyer still came in and paid the extra $15,000 because she wanted her kids to go to that school in Northridge. So yeah, it was a really good deal. It was a relief. And so during this time of escrow, all these things that I'm saying, like The EMD is due within 3 days of opening escrow. The inspection period is 17 days of opening escrow, and the appraisal is what, 17 or is it 21? I think it's
Uh, I think it's 21 now.
21.
Yeah, 21.
Yeah. And then the loan contingency is the final one. And once that is cleared, then everyone is cleared to close. Loan docs are going to go get signed and
Vanessa,
notarized.
what's a contingency for those people that don't know what a contingency is?
Contingency period is like you have like a short little timeline, and it's based on like the home inspection contingency is a short timeline, and you're saying you're going to buy this house based on this house inspection report, and if it comes back bad, you have the right to drop out.
Hmm.
And it's important that you have that period because you don't want to be tied into a house that, has a bad sewer system and, there's leaks and mold and whatever. So that's what that contingency period is for. It's for your safety. And also for all these contingency periods, your EMD is saved at this time until everything is removed, until all the contingencies are removed. Your EMD is safe. If you wanted to drop out, you could get your EMD back and drop out of the sale.
Yeah, also another good thing to keep in mind, guys, is a lot of people think it's your down payment plus your EMD. But keep in mind your EMD, which is the 3% that's usually asked for when opening escrow, does go towards your down payment. So that's something to keep in mind that it's not an additional 3%. That's going to go towards your down payment.
Yes.
And then I think we kind of already went over the whole inspection and appraisal. Like Vanessa said, the home inspection is for you to really dig under what's under the house and see if there are any issues that would cause any issues in the future. And the appraisal is usually it is something required from the lender's side just to make sure that the property is worth the loan amount that you're getting. Because if it's not, then the bank usually would not be open to loan you that amount. So that's why it's super important for the property to appraise for the number that you're getting it for. And that's honestly basically it. I don't know if you want to add anything else, Vanessa, anything else that you want to go over.
Um, I think the only thing we didn't talk about are interest rates. They fluctuate. And I'm not sure if you guys have heard this. You marry the house and date the rate because after
Yeah.
6 months, if the interest rates are lower, you can refinance and get a lower interest rate.
Yeah, that's correct. You asked what the rates are at the moment. Um,
Well, yes, and are they different for these types of loan programs?
yeah. Yeah, so current rates today, they just went up a little bit this past week. If you guys are in tune with everything that's happening in the world, there's a current war happening in Iran that's completely affected our economy because it's driven oil prices up. So everything else has also gone up. So interest rates were closer to the six line, and they shot up about half a point within the last few days. But today they did drop maybe about 15% of a point. So we're sitting a little bit closer to about, I want to say 6.25, six and a quarter. That's kind of what we're quoting most people at this moment. And you do want to keep in mind that all these products that we went over today, the non-QM programs, tend to have a little bit higher interest rates than these conventional products. So if a conventional loan product at the moment is six and a quarter, you can expect maybe up to closer to the 7% for a non-QM product at the moment.
That's high. So I have another question. Let's say you have a couple and one of them is a W-2, one of them's a 1099, and they want to buy a house together. Now,
Yeah.
you would have to put them both on one of these non-QM programs, correct?
Yes. Yeah, we could only do the non-QM because the other half wouldn't be able to qualify for a conventional loan. So we would have to go non-QM with both of them.
Yeah.
So it's they're just good products to keep in mind other than the additional than your traditional conventional products. Like I said, a lot of people don't even know that this whole world exists of other products other than your traditional standard loans. So it's a good thing to keep in mind, but do remember that it usually is a higher interest rate and it is a little bit more of a down payment that is expected from you. So those are the things that you want to do keep in mind. It's got its pros and cons for sure.
Yeah, but it's better than, renting an apartment for the rest of your life,
Yeah, I think it's a great way to get your foot in the door, especially for people like we said that don't show a lot of income on paper. I think it's a great option. Really, really good options.
Yes.
But yeah, that's basically it, guys. I don't know if we still have people in here. If you guys have any questions, I'd love to answer any questions that you guys may have. And Vanessa, if you have any other questions, let me know. I'm here to answer those too.
Faith Amamar.
Is Amimar here?
Yes, he's here.
Hey, Amimar, how are you?
Yeah, hi. I just got in like 20 minutes ago. Sorry.
No, no worries. Thank you for joining. It's good to hear from you again.
Yeah, I was gonna ask if this was recorded so I could rewatch it.
Yes, it's being recorded.
Okay. Thank you. Yeah, I have no questions for now, but I would like to message you about a meeting or if I could we could set a date for a meeting.
Yes, let's do that.
Okay. Thank you.
You're welcome. What about you, Faith? So Faith and I were connected via Realtor.com, and Faith was moving from a different state to California. Are you in California now, Faith?
So I'm still I had a work assignment get extended, so I'm still in Houston.
Oh, okay.
I'll be going back and forth. I just have to schedule when I can get out to California. I'll be going back and forth, and so I'll be there for June. Is what I know so far. So we can finally get into it in this coming June and get focused. If they make me permanently over there finally. So that's the goal. But if not, I still plan on purchasing additional rental properties over there. So regardless, that's still the goal, even if that goal shifts from personal to rentals. So my interest hasn't shifted. It's just it might be, the priority, like what kind of property. So it's exciting.
Nice. Okay. Well,
Have
huh?
have you purchased anything in the past, Faith, or would this be your first
Um,
purchase?
so we've leveraged one thing for our home here in Houston, my
Cool.
family and I.
Yeah.
And so we've got one family kind of like home,
Mhm.
and then we're working on our duplex now. So I do want to solidify that before I pivot because it'll strengthen my DTI. It'll
Yep.
strengthen my buying power, debt to income ratio.
That's
Yeah, so
good.
it'll strengthen everything. Yeah. So I was like, well, let me get prepared and then go there correctly,
Yeah.
and have Vanessa do what she does. She's great. She's been on it. So it's been wonderful.
Thank
Love
you.
to hear it. It's amazing. That's exciting though. It's great that you already have assets. That's you're gonna. It sounds like you're super well qualified for it. So that's great.
What part of LA do you think you were wanting to purchase in?
So whenever I come, I love to stay with my friends that are in Brentwood and Culver City. So I'm very spoiled. But I like Fairfax. Fairfax is cool. The Grove is right there. It's perfect. So I'm very central minded,
Yeah,
but
okay.
I don't mind. There is. I don't mind WeHo though. It's just WeHo's loud, because it's a party town. So
Yeah, yeah.
you go, but it'll be less expensive than obviously Brentwood or Culver City. So you just pick especially if it's a rental income, like WeHo will be great to rent out. So
Yeah.
it makes it, you know, your priorities shift with it.
Definitely a good place. WeHo has lots of value and you're young, so yeah, but either all of those places, Brentwood, lots of value there. Culver City, I don't really go there, but I know there's a lot of studios out there and people like it. Let's see. Nobody here. So for Faith, she would do what? A DSCR
Yeah,
loan?
I would do a DSCR loan for her to kind of just go based off the income of the property. But either way, she could even, it sounds like she has a pretty good portfolio already. So she might even qualify for a normal loan. So we could always look at different options. We just want to see those assets and also see her debts. But from the sounds of it, it sounds like she's pretty well seasoned and she would definitely benefit from the DSCR loan.
Nice. And for these loans, are they still 30 days to finalize and close?
Yeah, I would say we could get it done in about 30 days or so.
Okay.
Yeah. As long as we get all the documents and everything that we need, we move pretty quick.
Okay. And have you ever had someone sell their house and then the buyer just took over their existing loan, or what is that called? Where the seller had like a 3% and you can take over that loan
Yeah,
interest
you're
rate?
transferring over the rate. I haven't done it myself now, but I've heard about it. Yeah, it's doable for some. It's only doable for conventional loans, I believe. I know FHA doesn't allow it.
Oh, they don't allow it. Oh,
Yeah.
okay.
So it just depends on the loan type. I believe it's only conventional, only that does allow for you to do that.
Hmm. Yeah. Well, I don't think anybody would want to take over the non-QM interest
Yeah.
rate.
Yeah, I know. I mean, if you could get a deal for someone that's willing to sell you like a 3% like you just mentioned, that would be amazing. But I mean, who's gonna let go of that, you know? That's gonna be the issue.
Yeah, yeah.
But it's doable. But yeah, that's basically it, guys. If you guys would like to hear a little bit more about what your scenario would look like in order to qualify for a loan, feel free to reach out to me or Vanessa. We could schedule a strategy call and then kind of go over all your financials and everything that you would need in order to qualify. And yeah, we could get you guys up and running within the next few days or so.
Yeah, there's a lot of stuff on the market. Especially if you're in the valley. There's a lot of stuff just sitting around and you know, I don't know. I mean, usually people like to get into the mood of buying houses when the weather warms up. So people are out looking at houses, but there still are houses just sitting there. But which means we can negotiate again for you guys to get a better deal and credits towards closing costs. So yeah, if you guys want to talk, I'm available. If you have my number, we're available on Instagram, TikTok, and follow us on Instagram and TikTok, and then we'll follow you back.
Yeah, guys, and thank you guys all so much for taking the time to be here. Faith, it was a pleasure to connect with you. Super excited to have you here in California. And Amimar, whenever you have time, I'm more than happy to hop on a call to speak with you and your father. I know you had briefly mentioned the situation last time we spoke, so more than happy to hop on a call with you guys too.
Thank you guys so much for your time as well. I really appreciate it, and I look forward to learning more and let's get some stuff done. Thank you.
You're welcome. Bye, everyone. Bye, Amamar. Text us in the group chats.
Good night, everyone.
Good night, everyone. Thank you guys.
Bye.
Or evening. Yeah. Bye.